Hey guys, welcome back to my channel, The Black Accountant. If you haven't already done so, go ahead and like, comment, subscribe, and let me know in the comments of any kind of content you want to see going forward. So today I'm going to kind of continue a little bit more on this cycle of talking about taxes, just because we're in the midst of tax season and I want people to be as prepared as possible to get the most return and also to do their do their taxes as accurately as possible, just so that you avoid a lot of headache. So I thought it'd be a good idea to make a list of about 5 different things to really be careful about and watch out for when filing your taxes. So number 1, and this is a thing I think a lot of people don't really realize when it comes time to file taxes, whenever you file taxes, you're generally filing 2 returns. You're not just filing one, you're filing the federal return and you're filing a state return. Now, not every state participates in this. There's about 11 states that don't have a requirement for state taxes, but for the most part, most states do. I live in California. California is a heavily taxed state, so we do file our own tax returns. And a while back, I did a video on IRS's free tool for free resources, pretty much to file your tax return. Now, if you're filing your own return through the IRS's free filing tool, you can file your federal return for free, but they generally charge about $32 or so for state returns. So be aware of that when it's time to file your taxes. And also, you want to make sure that you're waiting to receive all of your forms and make sure that you know what forms you're waiting for before you file. The reason being is because if you don't do that, then you risk the chance of filing return and then having to amend it later. So an amendment can harm you in a couple of different ways, but the main impact could be that you had a big refund and then you forgot like a W-2 form where you didn't have any taxes withheld throughout the year. And once you include that, you're going to have to pay back the IRS or the franchise tax board or whatever your state government is. You're going to have to pay them back an amount of the refund because you didn't actually qualify for that full refund. So that's what an amendment would look like. The next thing I want to talk about is health insurance. So this is also a matter of federal versus state. So when filing your 2020 tax return, I know that federally you're not penalized this year for not having health insurance, but there is a penalty for different states for not having health insurance. So in California, if you're a single individual filing, you can have a penalty of up to $750 per individual for not having health insurance throughout the year. Now, if you had health insurance for a couple of months throughout the year, that $750 kind of decreases as you go along, but you do need to have health insurance, a qualified minimum health insurance throughout the year. Otherwise, you're going to get slapped with a $750 fine by the franchise tax board, and you'll see it when you're actually calculating and doing your taxes for the state. So this typically is an amount that would really add up if you're a family of 4, a family of 3, whatever, because then you're going to have to pay for each person that does not have or did not have health insurance in 2020, which is a big bummer. And I really don't understand it considering the fact that we had such a rough year in 2020 and so many people lost their jobs. But I digress. That's a whole other point. So the third thing I want to bring to your attention as well is medical expenses, especially if you're somebody that's in the elderly stages or something along those lines. You want to make sure that when you're including medical expenses, they don't exceed 7.5% of your adjusted gross income. So AGI, if you don't know, adjusted gross income is taking into account all the money you made in the year, minus deductions and adjustments to get to what's actually going to be your gross income that's taxed, the amount of income that gets taxed. So that's what the adjusted gross income is. So you want to make sure that you keep it at 7.5% or lower. Reason being is because that's what they say. Those are the rules. So that's the amount that you could deduct from medical expenses. And there's a little bit more rules into that as well, where it just like talks about what qualifies as a qualified medical expense for you to even deduct. But that would be its own separate video. Let me know in the comments below if you want to see that as its own video, and I might do that. The next thing I want to talk about is home use of office. So this is a big one because a lot of us spent time working remotely, working from home, and people want to claim their office or their home office on their taxes, but you can't do that unless it's your own business. So let's say you started a business in 2020 and you were working from home. you need to be very, very specific about your home office because you have to measure it by square foot. You actually have to talk about the portion that's in relation to your actual square footage of the entire home. And then you also need to prove a couple of other things, and it needs to be a space that you only work in. If you do anything other than work there, then automatically it's not something that you could deduct anymore. Typically speaking, this is one of those deductions that's more so reserved for businesses than it is for just individuals. Which segues into the last thing I want to bring your attention to. And the biggest one is business expenses. So you really don't want to go too crazy here because this year, especially, the IRS is heavily auditing Schedule Cs and businesses because people keep including expenses that are not ordinary and regular for the business. So let's say me, myself, I have a resume business. I didn't start it in 2020, but I started in 2019. And in 2020, I actually had a major loss because I invested in building a website and a lot of advertising to get more clients. So I did have a loss. Now, you want to make sure that you're keeping track either on an Excel sheet, paper, whatever it is, how much you're spending, keeping your receipts, and just making sure that every one of the expenses that you're including is something that's ordinary and regular to the business. The IRS typically, when they audit, are going to ask you for those receipts, and then you can make your case for whatever expenses that you have and why they were necessary for your business. So make sure that you talk about those things or include them, when including them into your return. So those are the main things I kind of wanted to bring to your attention. If there's anything else that I missed, which are probably quite a few, let me know in the comments if you have any questions on what you can and can't include in your personal taxes. That's it for this video, and I'll see you guys next time.